Hey traders, back to another video. So let's talk about a very common question as well. So why do I decide to go for short to mid-term trading rather than day trading? So inside our trade club, we currently have 180 plus traders. Some of them, they are day trading the futures market, could be the MNQ, the NQ, the ES. Some of them day trade the Dows or some of the indices. But for me personally, if you know me, if you know me back then, I used to be a day trader. I was day trading mainly pound dollar, more of an intraday trading, right? Just in and out, in and out, in and out. Trade frequency wise, I can take up to 3 to 5 trades per day. That was in my first and second year, I would say. First and second year was when I was really, pumping up my knowledge. I was really, spending as much as chart time as possible to back test, to run my forward test. At the same time, also, I have an extremely high trade frequency. Don't get me wrong, when I say I'm switching to more of a short to mid-term trading, all my traders inside Trade Club, they know for the past 1 to 2 years, I've been reducing my trade frequency, and I've been trying to bring my average risk reward a little bit higher because I'm trying to hold on to my winner longer. It wasn't because day trading wasn't profitable. Don't get me wrong. Let's not talk about the money figure, the monetary value, but let's talk about in terms of percentage growth. In my first 2 years of trading career, they were probably the craziest. I can experience a 500%, 1,000% growth in a year. But was it consistent or not? Was it sustainable or not? It remains a myth. What I can tell all of you is when you have such a high trade frequency, you are then required to make more decision, common sense. So when you are required to make more decision as a trader, you are subjected to making more mistakes. And that's one of the key points I would like to bring up today. The main reason why I simply switch from day trade to short to mid-term trade, sometimes swing trade, simply because I do not want myself to be too attached to the price movement, especially when you're trying to focus on the 1 minute, the 2 minute time frame. Things can go really fast, and sometimes, if you don't manage your emotion well, if you don't have a very robust and a very rigid, a very resilient system to adapt to the ever-changing market condition, because market condition changes almost every single day, especially when you're a day trader or even worse, a scalper. Things are more difficult naturally. But does it mean that you cannot become successful as a day trader, as a scalper? You can, because I made my first bucket of money on my first 2 years. For people who know me well, I made about 120k plus on my first and second year. Then I had some failure. Then I went into FTMO. I was one of the FTMO early batch when they only had a 100k account, when their profit split was only 70%, when the payout cycle was probably 30 days, I think. That was when I made a few 100k from FTMO. Then again, for some of you, if you don't trust me, it's up to you. Again, you can watch my previous video where I even open up my payout invoice. I then switched to my Forex fund, made about 3 to 500k there as well, etc. So don't get me wrong, I do make money day trading, but it wasn't sustainable. It was until one point when I really take a step back and I look at my equity curve, and I realize one very, very dangerous thing, which is I can have days where, because of my high trade frequency, because of the amount of decisions I have to make every single day, sometimes when I get caught being emotional, I can have a very steep drawdown. And to me, I can sometimes have an extremely big payout on prop firm. I can also make a lot of money on my personal account, let's say 50k. And because of the high trade frequency, drawdown comes in a larger number as well. obviously it's common sense. Let's say if you're taking 100 trades a month, it's common to experience 20 losses in a row, depending on your win rate, of course, but my win rate back then can go down to 30%. If you're a day trader or scalper, I believe you can relate to that. I'm considering BE as a loss as well. So my win rate can go down to 20 to 30% on a bad month. So when you have a 20 to 30% strike rate on a bad month, combining with your trade frequency, very easily I can experience times where I go into 10% or even 15% drawdown, assuming I risk 1% per trade static, right? So these were the only reason why I decided to eventually just step away from day trading, and I started, dialing up my time frame to 15-minute entry. Then right now I'm mainly on the 30-minute to 1 hour entry. And another big question would be, do I make more money now or do I make more money last time? Obviously, I make more money now. I'll be very honest with you. A lot of people, it goes back to one big question, which is, why do you see a lot of highly profitable trader that eventually switch to more of a swing trading approach? First thing, obviously, is because of their larger amount of capital. They have access to, few $100,000 or $1 million, $2 million of personal capital. Of course, they can increase their risk per trade, and therefore it allows them to have a wider stop loss and potentially swing their trade longer. But the most important thing is the peace of mind, right? When you're looking at the 1 minute, when you're trading on the 1 hour, 4 hour, or 2 hour chart, sometimes I trade on the 2 hour chart, you're able to really look at things from a very big picture point of view. What you're doing is you are focusing on price from point A to point B. You're trying to capture a large swing, and you're essentially focusing a lot on your price positioning and mastering your entry position. As opposed to on the lower time frame, as a day trader, as a scalper, you spend a lot of time trying to tweak things around, because of, again, like what I say, more decisions have to be made, means more improvement and more refinement have to be done. Always like that. So I hope all of you, after listening to this video, you really understand, hey, it gives you a better perspective of why I decided to go from day trade, a scalper, to right now short to mid term. Again, mainly because the peace of mind. Alright, I'm not at a position where I'm risking $100. Sometimes I can risk, all my traders know, I can risk $5,000 a trade, $8,000 a trade, which is not a bad amount. Alright, so by having a larger amount of capital, obviously thanks to all the effort that I put in, I was able to build my entire portfolio up. Because of the amount of capital that I have right now, I no longer need to day trade. But don't get me wrong, it doesn't mean that because you have a smaller capital, you need to go for day trade. Is it compulsory? It's not. Because these days we have prop firms, right? These days it's easier to get access to capital. But it all depends on, do you actually have the skill set or not. If you are someone who just started trading, you want to get more screen time, go for day trade, right? Forward test, back test, put in $100, just test it out. Obviously, when you're trading on the 1 minute, you get more sample size. But today, when you have achieved some sort of consistency, and especially when you're trying to scale up your size, scale up your capital, it is almost a must for you to slowly, having that transition into focusing on the bigger picture. Because sometimes commission can really pile up as well. I remember back then when I was day trading, I can have days where I trade 100 lots, 200 lots a day. And just imagine 200 lots, $7 per round contract commission. So that's already 1.4k commission per day, and it goes up, right? Sometimes commission can really be quite an insane thing when you're again trading larger size, especially when you try to day trade, and it gets harder. And that's why you see a lot of people, when their capital increase, they are sort of forced to go to mid to long term position trading or swing trading, just because when the amount of risk exposing gets higher, obviously you have to find a way to make sure that your equity curve wouldn't go like this. Imagine if today I hand you a 500k account. I personally right now, I have about 500 plus thousand on my IC account. So imagine if you're handling a 500k personal account, and do you want to see an equity gap that goes like this? It's hard. Some of you will try to debate that. No, I'm a day trader. My equity goes up. Show me, right? Don't just talk, right? Most of the day trader, unfortunately, they experience a large swing on their equity, not because they are bad, but simply because the amount of trade frequency they are taking, causing them to have losing period that goes really steep. So you have a big win, a massive win, 10, 15R, 20R, losses, win, losses, and that kind of large swing are things that I don't really want to see when you have a larger capital. You much prefer to have something more steady, right? It's not too wild, but at the same time you have a nice increment once in a while, maybe once a month, once a quarter, you have a nice bump on your equity curve. That's what you really want to see when someday you scale up your capital. So I hope all of you learn something new from this video. If you like it, please don't forget to like, share, and subscribe, and I'll talk to you next video. Bye bye.